Well, howdy there, folks. Welcome into today's video. Two core subjects we're going to speak about in today's video. Palantir stock going beast mode again here today. We're going to speak about what Cathie Wood is up to in regards to Palantir stock. Also kind of my opinions on where the stock goes from here and those sorts of things, okay? And then we're going to spend a lot of time talking about Fubo here today, okay? There was a big announcement that came out after the bell yesterday in regards to Disney and a few others kind of getting together to create a sports streaming service, right? And so everybody's freaking out. Fubo stock today, massive crash, 20%. So we're going to speak about a lot of from all different angles. And the more we're going to go deep into this, the more you're going to realize, oh my gosh, this might be a very flawed situation. And let's just call it's not nearly as scary as you might think. Okay, so a lot to go through in today's video. Appreciate y'all joining me as always. Thanks so much for being here. Thank you for being subscribed to the channel, folks. And right after this is released, I'm going live on Twitch for the PayPal conference call and earnings after the bell here today. PayPal conference call and earnings after the bell. So if you care to join me on that, that'll be pinned comment down there, okay? So Palantir, obviously another great day, up nearly 8%. We're now pushing 166% gain in the public account. Overall, it continues to go beast mode. And I mean, first, my thoughts before we get into the Cathie Wood stock or situation here in regards to what she's doing. You know, this is just a lot of excitement around Palantir in these growth rates, a 70% U.S. commercial growth rate. As soon as I heard that number, I knew, when I reacted to the earnings coming out live on Twitch, right? And I freaked out. Once I heard the 70% number, I flipped out. And the reason I flipped out is I knew immediately this is like a game changer for the stock and how people are going to view this. Because when you start to run these growth rates out over the next several years, even if you don't run, a 70% for next year, let's say you have 70% U.S. commercial growth for this year. Then the next year, let's say you have it going down to 60%. Then the next year, 50%. Then the next year, 40%. Then the next year, 30%. Even the numbers start to get so ridiculously huge when you're growing from a 70% growth rate at the sorts of dollar amounts that now Palantir is bringing in from that side of the business. And so it starts to dwarf like anything else Palantir is really up to, the government business, which is a great business, the international business, which is perfectly fine, but the U.S. commercial is going to end up dwarfing it all, it looks like, if you run this projections over the next few years here. And so that's where just ridiculous amounts of cash flow and profits are going to come from for this company overall. So very, very exciting in regards to that. Now, in regards to what Cathie Wood is up to here with Palantir, and what are my thoughts on this? So Cathie Wood is loading the boat on Palantir shares after these earnings. Cathie Wood joins Palantir party as ARK Holdings a $43 million stock. Oh my gosh, what is going on here? Palantir shares rallied 30% Tuesday after the company's fourth quarter results in AI opportunity resulted in analysts re-rating their estimates and price targets. Cathie Wood's ARK Invest bulked up on shares on the way up, potentially reflecting the Faith Alex Karp-led company disruptive potential. ARK's innovation ETF, this is the main ARK one, just to keep that in mind. She's got a few different ones, but the ARKK is the main one, okay? ARK Next Generation one also, and the ARK FinTech Innovation amassed 1,967,000 Palantir shares. At a closing price of $21.87, the firm added Palantir shares worth $43 million. What? Palantir now accounts for 1.84% of ARK's flagship ARK Exchange Fund. The stock is the 21st biggest position in terms of weighting in the ETF. So clearly she's loading the boat on Palantir shares. She might be loading the boat again today. Why is the stock up again another 7-8% today, right? Maybe she's out there being a big buyer again of the stock, right? So I understand why she would be buying the stock here after earnings, but on the flip side, I say, if you really paid attention to what's going on with Palantir, nothing should have come as that big of a surprise to you, right? We knew AIP is going crazy. Karp and the team already told us that. We knew that it was going to start to funnel in for numbers here very shortly. And we knew the U.S. was the leader in this market, right? So we knew the U.S. companies were much more likely to adapt. So if you look at the revenue numbers, EPS numbers, and even the guidance, there was nothing really there that was too shocking other than the 70% number. But we already knew it was going to be insanely strong to begin with, right? So, I don't know. she can do whatever she wants and go load up on the shares. It's awesome, but it's because you could have loaded up on a lot more shares a few days ago, right? And so now you're paying a 30%, 40% premium versus where you could buy just a few days ago, right? So anyways, already time to get into Fubo. By the way, if you want to see the ugliness of Fubo stock here today, we can pull that out. It is, it is ugly. Okay, let's pull up Fubo, my tubo, straight down the tubos. You ready to see this? You ready to see pain? You ready to see max pain here, folks? Ooh, look at that one day. Oh my gosh. Oof. Brutal. Just brutal. Other than that, it's a lot of green and excitement today, but man, brutal for Fubo, my tubo there. Man. All right, let's get into this.
Have a cable subscription, particularly perhaps young soon.
Sports streaming platform this year. Let's get straight to David Faber, who's got all the details right now. David.
Yeah, Melissa, this could be something that you can actually download as soon as the fall. At least that seems to be the hope of the three key partners here who will be contributing all of their sports programming to this yet-to-be-named entity. Now, I am told they're going to come up with a name soon. They're also going to have to come up with a price, of course. The idea here is to appeal to the ever-growing number of people who no longer have a cable subscription, particularly perhaps young men who like sports but don't want to pay $150 a month to have cable. And so wherever the price is, it obviously will be far below that number. And then they obviously as well, these consumers conceivably would also have their entertainment options via other direct-to-consumer apps that we know well. The two or three parties, my understanding is, have been talking for a bit of a period of time. Disney and Fox appeared to agree to an initial deal. And in fact, Fox has something at least somewhat similar in Australia, is my understanding, called KO, which has brought together a number of sports programmers to distribute something in an app somewhat similar. They brought in Turner as well, and now you've got something that conceivably will appeal to a wide variety and breadth and depth of sport fans, given they're going to have all of hockey, pro football, basketball, baseball, all the playoffs, of course, of those. College sports in terms of almost all the big leagues, most of the NCAA tournament, golf, tennis, cycling, soccer, and on from there. Each of the partners will own a third of the entity, but important to point out here as well, that doesn't mean that they'll each get a third of the revenues. It's my understanding that, for example, ESPN, which has higher fees and pays more to sports leagues, will get, as it flows through, a higher percentage of the revenues conceivably from the new app. So while it will each be owned a third, that is the entity itself, the revenues will flow through to each of the partners in a different proportion. And the entity...
This is where problems already start with this service. Now, keep in mind, they still don't even have a name for this, a price, a CEO. There's so many question marks here. It's ridiculous, right? This could be another flawed Disney situation here, right? And that's why Disney stock's actually down on the news. But revenue flow through, okay? Here's already a huge problem. How do you calculate that, right? And keep in mind, these companies are always consistently bidding on sports rights. So let's say somebody goes out and bids on sports rights and they buy some new sports rights. They want to throw it on the service. Do all of a sudden they get a bump in the streaming revenue that's going to come through to them? Oh, and you think, ESPN's all of a sudden going to be like, oh, yeah, you get more of the revenue? Nah, that's not how business works. No, there's going to be a bunch of fighting, a bunch of negotiations back and forth. One company's not going to be happy. They're going to say, okay, well, then I'm not going to put that on this. I bid for these rights. I paid up huge price for this, and now you're not going to give me extra revenue flow through for this, right? And the other company's not going to want to give anything there. They got their shareholders to keep happy. This is where a whole bunch of dilemmas happen. I mean, my gosh, does this sound like a freaking mess?
Not be bidding on sports rights on its own. It is simply an aggregation of the properties and a distribution mechanism to bring in more people. But each of the actual networks, ESPN.
And as soon as one of these companies says, we're not going to put that on the service, guess what? The other companies are going to say, well, fine then, we're not going to put our new content on here either. It also becomes, a tick-for-tack battle.
Turner, Fox Sports will continue to bid on various sports rights. So not perhaps something that hasn't been thought about, but they are bringing this to fruition. The parties do seem quite enthusiastic, as you might imagine. And again, they hope to bring it as soon as this fall. It does not, Melissa, impact the continued conversation.
Now, keep in mind, all these three companies are very desperate. Look at all three of those companies' stock prices over the past 3 years. You'll see, oh boy, these companies are very desperate to do something here to shake up things to try to get people excited.
That ESPN proper is having with potential equity investors. It's something we've talked about for some time. For example, with the NFL, which might contribute some of its cable networks at some agreed upon valuation for a percentage ownership of ESPN. It's my understanding those talks continue. And it also doesn't impact the future plans that Disney has to have a direct-to-consumer offering of ESPN on its own. We may get more details, in fact, tomorrow when Disney, reports earnings after the bell in terms of the timing. My understanding is the introduction of that product could be, let's call it, roughly a year or so away, and it would be sort of a different product than this one. But certainly an important moment. Melissa, that's the news as we have it right now.
Seems pretty confusing, David, at least at first blush. I mean, if these entities are going to be bidding on sports rights individually, the first reaction that I think many people had to this news was that this would put sort of a lid on how high those prices were getting. But if each entity is going to bid themselves, well, first of all, would they still keep the lid on because they're bidding against each other, and eventually it feeds into this one app, which they, to some level, share, or are they going to still be bidding in a very fierce and heated way because you earn those sports, or you buy the sports rights, and then you can put that on the linear channel as well?
That, I think, is the expectation, but I think your question is a good one. And you do have to wonder. Now, remember, they are also competing against the likes of Amazon and increasingly even perhaps Apple as well on certain of these sports rights. But my understanding, and again, why I made the distinction between the ownership structure and the revenue flow through, is that if you're paying more for certain sports, you're going to get a bigger percentage of the overall revenue from wherever this thing is priced in terms of the subscription fee, if you're ESPN, for example, as would be the case right now, and over time that may change. So that may perhaps also be impetus to continue to bid, not to mention, of course, being able to feed your linear networks, which are still of importance.
David, it's Karen. I'm a little bit confused. I thought at the top you said that they are contributing all of their sports, each of the three contributing all of their sports, but then you talked about ESPN, I think, being still a standalone.
Yes, it will be. In other words, if you have a cable subscription, you're still going to get ESPN. You're still paying for it. You're still getting it. So, but everything on ESPN will be available to the purchaser of this app, along with every sports that Fox offers and every sport that is offered by Warner Brothers Discovery, broadly speaking.
All right, Dave, we're going to let you go. Yeah.
Yeah.
I think I know Karen's her look is a little puzzled. I think we'll try and sort this out with Rich Greenfield, who's waiting in the wings. David, we appreciate your reporting. Keep us posted.
I will. I'm sorry I left you confused. Rare. Never happens.
David Faber. Let's bring in Rich Greenfield of Lightshed Partners. Rich, maybe you can shed some light on this.
I mean, wow, we love shedding light, Melissa.
Yes.
Let's first shed the light. I think this is a $30 to $40 product. So let's start with price point. I know David was kind of asking that question. I think this is going to be something that's quite expensive. You're talking about a lot of sports networks. And remember, this is not Hulu. So this is not Hulu for sports, meaning it's not like it's only going to work when the sports are on television. I believe what this is taking the linear networks, whether we're talking Fox, whether we're talking Fox Sports, whether we're talking ESPN or TBS and TNT. I believe all of those networks are going to be part of this. And so while the focus is obviously sports, I believe all of the content on those networks will be on this service. So you're talking of, because you have to have affiliates and pay affiliates like retrans. This is going to be an expensive service, not YouTube TV expensive, which crossed 8 million subs today. But this is still going to be much more expensive than the Hulu's, Disney Pluses, Netflixes of the world because of all of those sports rights.
So the issue already is, and I think if anybody's watching this, you're a sports fan, you're already pointing out issues, right? The fact is those three companies don't have all the sports rights. So already you're going to have holes here. Let's say you're an NFL fan, okay? Well, NFL is many different places. NFL is also on Amazon Prime. NFL is also on NBC. NFL is also on CBS. So you're already finding flaws all over the place with this sports streaming service because they're already going to be missing a ton of the absolute necessity channels you need as a sports fan, right? And so that's where like a Fubo comes in and they say, we're going to provide you everything you could possibly want, right? Even YouTube TV would be a lot better than this service for a sports fan. So this is not even the ultimate like sports fan package here. This is like a desperate attempt to try to get some sports fans, but the more diehard sports fans are going to look into this, they're going to say, wait a minute, but it's missing that channel, this channel, this channel, this channel. Well, I need something that has it all in one place. So I don't need to all of a sudden sign up for this, then sign up for a separate package for this company, and then a separate package for this company, and then a separate, like, you know, people just want to have it all in one place, be able to turn on the app, and like whatever they need is right there, okay? If I want to watch, if it's a Saturday in October, I want to watch college football all day, I need just one place I can go and watch every freaking game I want to watch, okay? That's Fubo. That's not going to be this service. They're going to be missing out on a ton of different channels and a ton of games, okay? So that's already, you know, there's a lot of holes here, a lot of holes.
That are bundled in here. The real question is, you know, if I think about winners and losers right now, this is obviously, you know, a nice positive step for fans. It's going to make it a little bit easier to access just the content they want if they don't care about a lot of the non-sports cable networks out there or even some of the smaller channels that are out there. It's clearly not a good thing for companies like Paramount who are not being included in this. I'd say it's not good for NBC, although obviously within the size and scale of Comcast, I think it's less of a negative than it probably is for Paramount, which has, you know, been obviously the subject of a lot of M&A speculation recently.
Rich, November 8th, Disney reported fourth quarter. Amongst many things, Bob Iger said, we're committed to building ESPN into the preeminent digital sports platform. Is this part of that vision, or is this sort of coming out of left field to you?
I mean, it actually seems like sort of a pivot from there, doesn't it? I mean, it actually sounds like, hey, something that we've been talking pretty openly about is that having a single sports service, meaning ESPN on its own. Yes, I love Monday Night Football. I like college football a lot, but, you know, the ratings are very heavy, sort of focused around football season. How do you build something that people subscribe to all year? I think that's sort of what this acknowledges, that it's hard to have a service with just what ESPN has. So, yes, as David pointed out, I certainly think there'll still be an ESPN direct to consumer, but I feel like this is an acknowledgement that for sports to really work, you need a larger bundle than what any one company's sports can achieve. And I think if you were to talk, you know, I mean, think about what Fox for years has resisted launching its own streaming service, saying, we don't think of Fox streaming really works direct to consumer. They've waited, obviously, and are now putting it into this bundle, which I think is sort of what ESPN probably should have done from the beginning. It's hard to be on your own in the sports world because there isn't that sort of year-round viewership. Sports are very seasonal and very tribal. And so I think this makes a lot of sense to work together. Why they didn't include NBC and CBS, obviously, is a big question for these companies in the weeks ahead.
Hey, Rich, it's Tim, but who gets pulled up here? And it seems to me like Warner Brothers of the three gets pulled up. And it gets into this, pardon the pun on this, too. I mean, the flow through is not going to be linear in terms of the linear TV dynamic. In other words, so we know that they're not going to get paid equal amounts. But it does seem to me the other side of this is that I worry about Disney Plus, where there's a lot of people that had that bundle. And sure, they had Disney Plus, they had all the Disney stuff, but they really wanted more, the access to the sports, but they took everything for a little bit more of a price. I would be worried about that.
Look, I think we're talking, you know, WBD. I think this is definitely a surprise that they're put into this group. You know, they don't have major NFL rights. And so I think that was sort of a piece that people were looking at it going, without football, are they as important? You know, I think there's been a lot of conversation. Does WBD need to merge with NBC Universal ultimately to basically have the power of the NFL? So this is really interesting that they're included. I think this is definitely a win for Zaslav to be included in this triumvirate that's going after the sports problem. Now, I will say, Tim, at a $30 to $40 price point, and it doesn't have CBS, NFL rights, doesn't have, sort of some of the Big Ten stuff that's on there, like doesn't have EPL, doesn't have Sunday Night Football. Yes, you can sign up for Peacock and Paramount Plus separately, but I do wonder how appealing is this service? I think, that's sort of the missing, question is like,
if you're an NFL fan or if you're a college football fan, you have to have CBS. You have to. NBC is also insanely important if you like college football or you're an NFL fan. You can't just not have those. That's not the way it works.
Isn't really the everything sports service. It's getting in the right direction. I think it's a tremendous step forward for the three management teams to actually start this and try to move forward with something innovative and different. I do have a question of what does this mean for Charter, Comcast, DirecTV? How are they going to react? And they're going to say, why can't we bundle this exact same product? I think there's, 100%. My guess is there are going to be a lot of questions being asked on conference calls over the course of the next few weeks about how can this actually be achieved relative to existing agreements.
Hey, Rich, it's Karen. Thanks for coming on. Is this something that would need antitrust approval?
100%. Great question right there. Great question, right? Because here's the deal. Here's where things are going to get legal, and here's where the government's going to get involved. Okay? So now, if you're a cable company, a satellite company, or even a streaming company like YouTube TV or Fubo, right? Well, now that these guys are all going to try to be creating their own separate product that is going to potentially compete with your product and take customers away. Now, if you're not getting favorable potential rates in terms of what these companies are going to charge, now you can go to the government and say, these guys are creating a monopoly to try to eliminate us. Now, this is where the government gets involved because sports is huge. It's seen as like a public necessity. That's the way the government kind of looks at something like sports. It's like a public necessity, and it also keeps everybody's attention off of what the government's up to. So it's a very needs-based thing you got to understand, okay? So if all of a sudden companies are threatening to cause problems there, this is where the government steps in and says, wait, what are you guys doing? You're going to create a situation where you have monopoly here. You're going to eliminate competitors and potentially make it where, sports fans aren't going to be able to as easily access these different things. That's where the government can get involved and step in and say, no. And like I said, any time where, let's say, an ESPN goes to a satellite company, a cable company, a Fubo, a YouTube TV, and isn't giving favorable rates in terms of what they're charging for their content, these companies could easily open up a lawsuit, easily go to the government, tell them what's going on. So I think this is a new can of worms that I don't think these companies really want to get into, because as long as you're kind of, in your own place, you can kind of negotiate really well. But as soon as you start to try to create a monopoly type service, now you got problems there.
Meaning to work together.
Yeah. I mean,
it's a fascinating question. Karen, no one has asked me that, obviously, in the last 20 minutes. It's an interesting question of, is there going to be any sort of attack on this is like working together? It's not the leagues themselves. Obviously, the companies have already done something like Hulu, so there's certainly precedent for working together. And I would say, this is certainly not comprehensive in its control of sports rights. So it would surprise me if there was, but I would never say never. The one winner that
By the way, guess what? Okay, I can already see it. Every satellite cable company, Fubo, YouTube TV, I almost guarantee you their lawyers are already drafting up stuff to the government right now about this. I almost guarantee you. So then, and we know the government is very anti anything acquisition related, anything that tries to create some sort of monopoly on an industry. We know they're really after everybody right now, right? And so this could slow the process. So they're talking about trying to launch this by fall. There's very much a potential that especially if the government starts to ask questions, poke around here, this won't get launched by the fall. There's also a potential here. I would put it, if I had to put odds on it, I would say a 50-50 that this service never gets launched. I would say 50-50 that it never gets launched. No, I'm not talking about a success. I'm just talking about getting a launch date, okay? So we'll see how that plays out. But believe me, every single cable, satellite, and streaming company paid attention to this news yesterday, and they're all talking about it, and their lawyers are all talking about it today.
We should be talking about, though, this would seem to be a huge win for the NBA and Adam Silver, because if this really helps, as you mentioned before, if this is helping WBD be part of this, you have to believe that that means that WBD is going to retain rights for the NBA. Like, people were worried, we were worried that they would lose those rights. I can't imagine they're going to be part of this joint venture and not retain NBA rights. And so it probably means that both WBD and ESPN are paying up to retain NBA rights, which is clearly going to be a nice win for Adam Silver and the NBA.
Hey, Rich, it's Dan. Just let's say this thing launches for NFL. You mentioned the term NFL a lot. I was just looking at my YouTube subscription. It's $73 a month. I pay $11 a month for ESPN Plus. I kind of have everything I need there, and it's all streaming. It's all over the top. It seems like this is going to be a very confusing offering, and depending upon how far ahead of time they get it out before the NFL, is this thing DOA? Is it just to the point? We weren't confused by David's reporting. We were confused by all the offerings and why it needs to exist, and why it needs to exist the way you just described it without a bunch of other stuff that you already get on YouTube TV.
100%.
The answer is yes. So I'm going to first say you're right, Dan, 100%. Two, I would say you do take YouTube TV and you don't have regional sports networks, right? So there is sports content that isn't there.
Fubo
you
wins,
couldn't watch the NFL, the Travis Kelce Peacock game. You couldn't watch on your YouTube TV. You had to get Peacock. And so the need for multiple services, this fragmentation of sports, is a problem. Now, I think it is a positive that sort of the sports rights that are being owned by the three companies are being put into here. So incremental Big Ten streaming service, ESPN Plus is all being put in. So it isn't separate. But you're 100% right. This does not solve the one-stop shop for all sports rights for a sports fan. YouTube TV is still better. It's obviously more expensive. But even there, you said you're subscribing to ESPN Plus in addition. So there is no magic bullet for sports. I think the one clear standout here is the loser is going to be basic cable entertainment channels that are not part of this package are going to have yet one more headwind and create even more challenges for these legacy media companies that don't have their channels in here.
Alrighty, folks, I got to get ready for my Twitch live stream. PayPal earnings about to come out in the conference call, all that good stuff, so I got to get ready for that. But to put a recap on this, it seems like this is a very flawed situation. Is it a risk to Fubo? Absolutely. Is it also a potential huge upside catalyst for Fubo, considering the stock just sold off massively, and this service might not even ever see the light of day? And if it does, there's a lot of question marks on if it's ever going to be successful. Whew. Yeah, this is no in the bank type situation. I can tell you that much. There's going to be a lot of problems from a lot of angles. Okay, appreciate y'all joining me. Much love as always. Thanks so much for being subscribed. Join me on Twitch right now. Pin comment and peace.